Hello everyone and welcome back to the Clara CFO Group channel. Today I have for you another financial review. So it's been a little while since we've actually done one of these, but these are videos where I take a set of financials, a real set of financials that a real business owner has sent to me, the profit and loss and the balance sheet, and I talk through them. We scrub it of anything that is identifiable. You guys don't know who the business is exactly, but I kind of tell you what it is. And we go through it and we talk about like, this is healthy, this is not healthy, this is something to watch out for. And we just kind of talk through the business ups and downs and things to watch out for. So this is a great time to just learn a lot about reading a profit and loss, reading a balance sheet, but also hopefully we'll find some business insights and maybe we can help out this business owner with a few tips, maybe show where maybe some expenses are a little higher than average, maybe show where some calculations and percentages might be really healthy. I don't know. I actually haven't analyzed these financials yet as I'm doing this little intro. So I'm going to be walking them through like pretty fresh. I don't look at these a lot before I press record. So I don't have it all planned out exactly what I'm going to say. I just kind of start looking at it and reviewing it. And that's kind of the fun of these videos. Okay. So hopefully this can be helpful to you. This business is a music studio. And with that, it's actually quite a fairly decently sized music studio where it'll have multiple people being taught at the same time, multiple instructors, and they have a physical location, which I saw on the notes from the owner. And they are also in kind of a expensive area. So as you will see from some of the expenses on the P&L, and they are in the high six figures in revenue. So definitely they're doing a lot of business and growing pretty rapidly, it looks like. So I'm excited to dive in and see what kind of insights we can find from these financials. Without going any further, let's go ahead and hop into those financials and I will talk through this music studio with you guys. Okay, so here we are in the financial statements for a music studio. And what you'll see here, we're going to go through the P&L, the profit and loss statement first, and then we will touch on the balance sheet. There's some really good things on the balance sheet. As I was putting this together and cleaning up the financials, I saw some really great gold nuggets. So stay tuned for the balance sheet, but let's go ahead and talk through the P&L. So I'm just going to walk through this and actually just make some observations as we go. I might make some notes over here and calculations on the side, but if you guys have been watching me for a while, you know that I really like to look at financials on a month-by-month basis. So this is a profit and loss pulled by month. And what we can see here is we can see, what does revenue look like across the year? So for me, I look at the average. The average is about $65,000 per month. And to me, this looks like things are pretty consistent across the board. I am seeing a little bit of peak over average starting in July into August, September, October. And so it kind of looks like to me that maybe they're gaining students throughout the year. So one thing that the business owner did tell me when they sent me over the financial statements is they actually do something that I think is really brilliant. They do music lessons on a monthly subscription where they have basically calculated that students should have a certain number of lessons in a period of time. So let's say a year, like maybe they are supposed to come to one lesson per week, and then they kind of annualize that cost and then break it down into a monthly cost. So that way they have a more predictable level of income coming in rather than just being paid when a student has a lesson. Sometimes what can happen is people will get, cancel lessons or maybe they won't be very consistent. So this is a kind of way of, they've probably determined that music lessons are most effective if you have a regular cadence of showing up to your lessons. And maybe weekly is the best way to do that. So they've kind of locked in their customers in some way with this pricing model, which I actually think is really, really smart. And they've baked in some vacations there that kind of go along with the school schedule. Overall, I just think it's really, really smart. And what I'm liking here is that we don't see really big dips in revenue. So we do see some months that are a little bit slower. So let's say for February, for example, is their lowest month. I see a lot of industries that actually February is the lowest month. So that's kind of interesting. But February is the lowest month overall, and then kind of building up into the fall of And then maybe this ties a little bit with the school year, perhaps just as people are getting back into school, maybe they're getting back into lessons or maybe wanting to start lessons for the first time. Maybe, new students starting band, things like that. Maybe parents want them to take lessons. This could be consistent. I would be curious if this is a trend that this business owner might see year over year. Really great there. I'm loving to see that. But one thing I noticed is that all of the income is in this one line item. And I have to think, because I did check out their website and they, do different types of lessons. They do guitar, voice, piano, a violin, lots of different types of lessons, but they also do group lessons and individual private lessons. And I kind of wonder if there's any way to break out this income to be more meaningful to them. Maybe or if they do have most of their clients, or let's use the word students, most of their students on a recurring revenue model, but maybe some aren't, maybe just some pay ad hoc, maybe breaking out the revenue line items in that way, like maybe retainer versus like one-time lessons, or maybe if it's actually I'm sure they have this data somewhere, like how many piano lessons are we doing, how many violin lessons, et cetera, et cetera. So I would like to see this revenue broken out in some way. I'm not sure what would be the most meaningful. That would be a conversation we need to have with the business owner and also look at the data and see how we could separate this out into QuickBooks. But I would love to see that give us a little bit more meaningful information than just one revenue line at the very top. So overall revenue looks great. They're almost at 800,000 for the year. If they're trying to continue to grow, which it kind of looks like they are based on the trend throughout the year, they could be seeing really close to $1 million next year especially if they kind of put some fuel to the fire and really try to ramp up their students. Now, in order to get to $1 million, you need to have 83,333. So if you take that number, $1 million divided by, so they need to be targeting 83,000 if they want to reach the $1 million mark. Now, that may or may not be a goal for them, but they're pretty close. So I think if they really wanted to get there, they could probably get there with their current capacity. They did move into a new facility this year, so maybe that's part of it, to make room for growth, additional growth. So it's just kind of a target if they want to start moving in that direction. One thing I noticed is that they don't have any cost of goods sold on their P&L right now. And as I was kind of briefly looking through the financials, I think there's probably a few things that would be considered cost of goods sold. So I'll try to point those out as I see them. I also noticed that the chart of accounts is in alphabetical order. Really wouldn't recommend that. I see some things that could be grouped together in more meaningful groupings that could give you better information to make better decisions on. So I would recommend grabbing my chart of accounts template. I will try to put that in the description box below, but I give that away for free. And it kind of gives some recommendations on how to group your accounts and then how you can number them so that like groupings can be together. And you can also create sub-accounts from there. But besides the actual organization of it, I'll kind of point out a few things here and there. They do have auto expense, which I think is interesting. I would like to understand why they have auto expense, or if this is kind of a business owner's personal auto that's trying to be put on here. Maybe they travel to some people's locations, but they do have this really nice facility that they have moved into, so I'm not exactly sure. So that would be a question I'd have to the business owner. How are you actually using these auto expenses? Let's make sure that they're actually for business purposes. And then there's this business promotions line. I thought maybe this might be advertising, but then I saw marketing and advertising expenses down here. So my question is really like, how are these different? What's business promotion versus advertising and marketing? And really if that could all be in one line item. You might consider breaking down marketing into like how you're marketing. Maybe it's like events versus digital versus, maybe paid advertising or things like that. But something to think about. Remember that you can always customize the chart of accounts in QuickBooks. It doesn't have to be the standard. You can make it work for what makes sense for your business. Then we get into company event expense. Not exactly sure if this is for employees or if it's for students. I'm not sure, but that looks like that's probably legitimate. Just decide if it needs to be under like an advertising or if it needs to go into more like meals and entertainment kind of thing. Computer expense, I am not sure if this is software or if this is a hardware thing. It is a little weird that there's no charges at the beginning of the year and then all of a sudden there's charges. So I just kind of wonder if maybe that might be a little bit of a bookkeeping thing. Maybe there could be some cleanup that needs to happen there. Continuing education, not exactly sure what this would be, but as educators, as teachers, I imagine that there's probably going to be teachers wanting to continue to learn themselves. So this makes sense as a reasonable expense. There's also this decoration and renovations line. So the business owner, when he sent me these financials, told me that they were moving into a new location or that they had moved into a new location at the beginning of the year. So this is in line with his statement there. It looks like they got in and they probably did some significant decorations and renovations. The one thing I would say is that if it is actually a tenant improvement, so if you're making an investment into the location, you can put that on the balance sheet and amortize it or depreciate it over the life of the tenant improvement. You might want to make that decision if you actually, changed anything, remodeled something, improved the space that you were in, even like painted everything. It could be considered a tenant improvement and it could be on the balance sheet. So that might be a way to, yes, you already spent the money, but it might be a way to sort of increase your profitability for this current year. Or maybe we just want to expense out all of that and that's okay as well. It kind of just depends on really what that is and how you want to manage that. This might be furniture and things like that. Then we also want to assess, does it need to be on the balance sheet? So that would be a question that I have. And you can talk to your CPA about that and what makes the most sense. Dues and subscriptions. So my guess is this is probably something like software. Dues and subscriptions always gets mixed up with software because dues and subscriptions is just like a really old name for an account that has been there for a long time. And so when people hear the word subscriptions, they usually put software in here. That's fine as long as we all know that that's what that is. But sometimes it gets mixed with like business dues or like maybe let's say your chamber of commerce or something and you pay the dues for your chamber of commerce that might actually get lumped in with your software subscriptions. And to me, those feel like really different things. So I would either create a separate line for software and then leave dues and subscriptions just as it is, or maybe rename both accounts and just try to clarify like really what is this versus what is that. The next thing on here is employee benefits. Now I would love to see employee benefits be close to payroll, which it should be close to payroll taxes. So I definitely recommend renumbering these things so all employee costs can be lumped together. But it does look like maybe they didn't have any benefits towards the beginning of the year and then they kicked in at the end of the year. So I would definitely ask, is that actually the case or is this maybe a bookkeeping thing as well? One kind of big red flag that I'm seeing is entertainment expenses. So there's two lines on here, entertainment and entertainment non-deductible. And actually in 2022, no entertainment expenses are tax deductible. So I would very much question whether this is actually entertainment or if this is maybe meals expenses or if this is something else, because meals, on the other hand, were fully deductible in 2022, not so in 2023. But I really would like to dig into that. So to the business owner, check it out and look and see what those expenses are. If your CPA just looks at this and sees entertainment and they don't question it, then that's $8,000. Well, more than $8,000. It'll be almost $9,000 that would not be tax deductible. And we need to ask ourselves if that's really the case. Okay, equipment expense. This looks like, obviously being a music studio, you probably have lots of musical instruments and things that need to be tuned up, that need to be taken care of, that need to be restrung, that need to be fixed on occasion. So my assumption is that's probably what this is. That makes sense. And I would just think that you would probably have a regular annual budget for maintenance on your own musical equipment. Then we get into insurance. So here, health insurance, it's pretty low. My question is this for the entire team, or is this just for potentially the owners? If it's just the owners and maybe they're paying on private insurance or like on the exchange or something, I would question why we have it here on the business P&L. But I'm not exactly sure. This just looks low to me. And then actually it's decreasing across the year. So the first half of the year, it's actually more expensive and then it decreases, which is just a little bit curious. So I would have some questions about health insurance and ask what's happening here. Liability insurance looks pretty reasonable, especially for the revenue at the level that it is. This looks like a reasonable cost to me. And then workers' comp also looks fairly reasonable, maybe a little bit high, but sometimes like in certain states, you don't have a lot that you can do to lower your workers' comp premiums, except for just keep accidents low and then don't have any claims. And that's a good thing for a workers' comp. But having had clients that have been in this state before, this looks pretty reasonable to me. Interest expense. Okay, so we know what interest expense means, that there's going to be something, some kind of debts on the balance sheet, hopefully. Otherwise, why are you paying interest expense? So it does look like it's decreasing throughout the year. So that's a good sign that they're paying down the principal of whatever they are having interest on. So I'll be curious once we get over to the balance sheet, what's there. Total just over $1,100. Not a huge amount, but would love to see if we can conquer that debt. Janitorial expense. Also, there's not a lot of expense during the year. I wonder if maybe there's janitorial included in the rent. So that's a question that I have. And then legal and accounting didn't kick in until the end of the year as well. So maybe this was hiring a bookkeeper for the first time, which would be pretty cool. I like that. And then maybe this is kind of like catch up. So yeah, I would expect that they would probably, that's what it looks like to me, that they hired a new bookkeeper. But that would be a question for the business owner as well. Marketing and advertising expenses. So this is what I said before, business promotions and marketing and advertising. What's going on here? I would really like to know, what are you doing for marketing and advertising? It's not a lot of money to be spending throughout the year, even if you combine it with the business promotions up here. I mean, we are talking $2,200 in advertising expenses on almost $800,000 of revenue. That's very efficient marketing. Okay, so whatever you're doing, it seems like it's working. I'd be really curious how new students are coming in. Is it all word of mouth? Is it, events that you're doing? I'd be really curious. Well, they do have company events here, so maybe that's, even if that's also considered marketing, that's closer to, that's $3,700. Pretty effective marketing overall. Good job. Keep up the good work. And hopefully, things like word of mouth, I can imagine that would be a really effective way to grow your student base. And also, like, if you're doing a really great job and you have a lot of really amazing musicians coming out of your lessons, I imagine that also is really great advertising as well. So, okay, merchant fees expense. This is what I would call a cost of goods sold. Okay, so I'm just gonna mark that over here. That is cost of goods sold, because you would not be charged merchant fees if you are not taking the revenue in. So what will happen is, if you mark it as cost of goods sold, there will be a couple extra lines in between your income and your gross profit. And that would be your merchant service fees. You could put it there. This is a pretty high expense, actually. So I just want to see how much that is. Okay, 3.2%. So this is fairly high. I would be curious how you're receiving credit cards right now. Obviously, you're taking credit cards. And I would be also curious if you could potentially incentivize people to use ACH and do their recurring transactions on a bank account rather than a credit card. Sometimes I've even seen like giving a 1% discount to put it on ACH rather than credit card could potentially save you 2% here. So and you could also just make it a policy at the same time that you don't accept credit cards and that you also go to ACH. But that could deter some people as well. I would think, this is $25,000 of merchant service fees during the year. That's a pretty big chunk. If you could take that down to, $5,000, only use the credit card when you really need to, like when somebody's like, that's the only option for them is to put it on a credit card, then you could, maybe go that way. But this is a big potential savings opportunity right here, because I think you need to assess like your clientele and what you think could work. But I would imagine that where you are in the country and the types of people coming to your studio, I imagine that you probably could shift to ACH. Especially, I think I'm getting the feeling that this is a little bit more of an affluent community given the rent that we're going to talk about in just a second. So if that's the case, maybe that it makes that transition to ACH maybe a little bit easier. That might be an assumption. So something to think about overall. It may or may not be a big deal breaker for a lot of your students. Let's go into office supplies. Not entirely sure what you need to be spending $12,000 or almost $12,000 on with office supplies. I imagine that there's probably some printing that happens in this type of business, sheet music and things like that, maybe chord charts, things like that. But I'm thinking printing costs, but really curious why this is as high as it is. I would think that even if you were doing a decent amount of printing, this does still seem high to me. So I feel like I have questions. Maybe this is also snacks or food or things for the staff. I'd be curious about that. But this does seem to be a little bit high, and I bet you could probably rein in spending a little bit more if you wanted to improve the profit margin. Parking really minimal, not going to talk about that. Payroll processing, this looks pretty in line with the number of employees that I think you have. Nothing crazy there. Penalties, not sure exactly what that is all about, but I guess not too bad of a penalty, I suppose. Postage, printing. See, here's a printing cost of $60. So maybe it's not even in office supplies. I could be wrong about that. Purchase services. This is interesting. I have no idea what this means. Is this maybe outside labor, contractor expense? Is this maybe bringing in ad hoc teachers here and there? I am not sure. I have no idea what purchase services means. So I would like a better descriptive name for this. And then if it is labor, why are these people contractors versus payrolled employees would be a question. And yeah, I'm just really not sure what this is. Or maybe this is things that are, outside of the normal course of business and you're hiring things or people to come in and do other tasks. With that being said, it is pretty consistent that there's expenses every single month on it. So I do have a question of like, maybe it's not so ad hoc. Does this person need to be an employee if this is actually labor? Recital expenses. This is interesting because I imagine that if you do a recital somewhere, you might need to have a rental cost to actually do the recital in a different location. And maybe there is kind of like more of an event and costs associated with that. So that is totally fine. I think it's fine. I like that there's a very specific name for this account. And this is just something that needs to be budgeted for every year. So no problems there. Okay, here's the big line item. Rent. Rent is $8,428 per month. That is not insignificant. I was a little shocked to see the cost of it, but then I checked to see where you were located. And then I said, okay, that makes a lot more sense. This is located in one of the more expensive real estate places in the country. And then they did move in at the beginning of the year, so there was probably additional costs at the very beginning. This might be first and last month's rent. That's what I'm assuming that might be. So that is, a big hit to the P&L. It technically is a prepaid expense if that was the case, but I did see maybe a deposit on the balance sheet. So we'll look at that on the balance sheet. I just want to make sure that we're understanding. Or maybe this was even like 2 locations. Maybe there was 2 locations that were overlapping in the month of January. Yikes, if so. But that's a really big cost to take in just 1 month. So I'd be wanting to look into this amount and understanding that. Also, just curious how long the lease is. Where did you move from? Why is this place better? Just have some questions about that. Not necessarily good or bad, just questions. And then repairs and maintenance. So interesting that there's repairs and maintenance at the beginning of this rental and also decoration renovation expense. So it could either be that the old place was overlapping and we were fixing that up before we moved out, or this is also repairs and maintenance of the current place as we move in. So actually these facilities costs are racking up. I would recommend actually putting all facilities costs into a category. So you have rent, repairs and maintenance, utilities, and I see security and alarm down there, and then decoration and renovation, have all of those in a facilities cost, so you can see one lump sum of how much you're spending on facilities total, because I think that would be really nice just to be able to see it, because it is the biggest expense after payroll for you guys. And I think that's really important. Keep an eye on too, and also budget for and plan for. Going into salaries. Okay, so we've got officers broken out from employees. I think husband and wife owners are both actually employees as well. So I think they are probably included in this officers. That would make sense. And then other employees are being paid for their time, which makes sense. One thing I like to look at is labor efficiency ratio. So I will take total labor costs, actually. Take total revenue. I would take gross margin, but they don't have any gross margin calculated on here. Divided by 2.15. That's good. Anything above a 2 is what we would typically see in order for the company to be profitable in a service-based business like this. 2.15 is actually quite good. If we actually moved up some of these costs into cost of goods sold, this would go down a little bit, but I'm not going to do that calculation right now. But if we took merchant service fees and put that into cost of goods sold, you would actually take gross margin divided by payroll costs in order to get your labor efficiency. But actually, now that I'm saying that, I'm remembering that this does not include payroll taxes, which I typically include. So let me do this real quick. Let me do total salaries plus. There we go. Okay, 1.97. Okay, so that lowered it a little bit. And also if you included the gross margin, that will also lower it a little bit more. So pretty healthy, I would say. I mean, this business actually is profitable, so pretty healthy. What I would say is just, keep an eye on your labor to revenue ratio. If you have to, you might want to look at your mix of your instructors and make sure that you have a good mix of people who are, more senior and more junior. And also, don't necessarily keep raising labor rates, but forget to raise your rates to your students as well. But I believe you said that you are raising these rates every single year. So that's great. Just keep that in mind, as you need to also pay your people more over time. Security and alarm, again, I would put this in facilities costs. Small value purchases, I don't really know what this means. Are these assets that are just not big enough to put on the balance sheet? They're like equipment purchases. I'm not exactly sure. I would make this more descriptive. Is this like computer hardware? Is it musical instruments? What is it? I'm not sure. I would be more clear on that. Oh, and here we have software and web hosting. I don't think there's any software in here. I think all of this is web hosting, because this is the same amount every single month. I don't think that's software. My assumption is there's probably some software up there and dues and subscriptions like we talked about earlier. Student material expenses. This is cost of goods sold. I imagine that people are probably buying books for their students, or maybe just pass-through costs where it's like, hey, we're going to make an order. We're going to get your next, 2 levels of books, for example. And then maybe it's just billed directly to the family. If that's the case, this is cost of goods sold. So $12,000, this would go up into cost of goods sold, which would give you, a lower gross margin as well. So if I'm understanding this expense correctly, which seems to be labeled pretty clearly, I think that should be cost of goods sold. Okay, and then taxes, this is interesting. We've got like a business license, domestic stock statement, franchise tax, pass-through entity tax, and then payroll taxes. So payroll taxes definitely would be moved up with payroll expenses. I would rename this payroll expenses and then put employee wages, officer wages, payroll taxes in like sub-accounts, put employee benefits up there, and potentially health insurance. Any employee cost needs to be lumped together. I don't like it when taxes are down here, because you need to see all that employee cost together. Now, the other thing that I find somewhat interesting is this pass-through entity tax. I would like to know if this is going to the state or if this is going to federal, because if this is $11,200 paid to the federal government, and this is I believe this is probably an S-corporation because the owners are on payroll. My assumption is that this is probably an S-corp. With that, if this is a pass-through entity, this should not be on the P&L. It should be taken as an owner's draw, and then those taxes are paid through the business owner's funds. So they take the money, take it home, and they pay the taxes, or at least that's how it gets recorded on the financials. So if that were the case, this would actually lower the expenses for the year, and it would increase their profit for the year. So I want to know that. I believe that's probably what this is, but I'd like some clarity before kind of coming to a full conclusion on that. Telephone, again, this could be another facilities cost, really, if it's, but this might be cell phones. If that's the case, you could put this somewhere else. There was a big expense in February. Maybe there was actual phone purchase at this point in time, because that does seem very high for just telephone expenses. Travel, it doesn't seem like they travel very often for things, and I would expect they wouldn't for this type of business. So that's in line. I don't see that being a problem at all. And utilities expense, I would put again into facilities, but I'm wondering if maybe this rent actually includes utilities, because I don't see any utility expenses for after January. And this is another reason why I kind of feel like maybe there was an overlap in January, closing down the old location and then starting the new location in January. So that definitely caused a loss for the month of January. But even so, with all those extra expenses, I mean, it was only a $6,000 loss, like with how much they were spending with all this extra rent. I'm actually surprised it wasn't higher. And all of the improvements, expenses, renovations, and fees getting in there. That's actually shocking. Going into February and March, mildly profitable, but then having some pretty big profit months starting for the rest of the year. So I think this is probably due to some labor increase. Yeah, labor was a good bit higher in February and March, so it was lowering the profit margin. So really, profit increasing here and there, a little bit up and down, probably with the ups and downs of payroll. There's some low payroll months and some high payroll months. But overall for the year, ending the year at 115 means that the profit margin, or profit percentage, is about 15%. Okay, 14.8. Now, if we were to take out this federal tax payment, I'm going to assume that that's probably what it is. That brings us up to 16. For a service-based business like this, I would be targeting 20% profit percentage. So I would really like for this business, I mean, they're operating really well. I mean, 16% is an extremely respectable, good profit margin, but I want more. I want more for this business owners, because it doesn't look like they're paying themselves a lot. And I would like them to be generating more profit, because especially if this is for two people and living in this state, this is not a lot of pay. So they need to be making a lot more profit. With that, I think that they have some opportunities to potentially cut down on these merchant service fees, cutting back on some things like maybe this purchase services, whatever that is. Rent will be lower next year, which will be great because they are not going to have this doubling up of facilities. You know, being really mindful of when they need to buy things, getting the best deal that you possibly can. And then definitely the merchant service fees, and we pointed out a couple other things. Being really clear about what this entertainment is and trying to eliminate that if that is not tax deductible is really critical. And then office supplies, that was the other one that I thought, I really feel like for the type of business, we could probably get those expenses down a good bit. You know, and just really be mindful of where the spending is going. Do you really need it? I'd like to see this net income increased to 20%. Just so, because I think that this business, I think these owners are not paying themselves enough. So I would like to see that going up so they can at least take more significant draws or increase their officer salary overall. Let's go ahead and look at the balance sheet. And so I have here the December 31st, 2022 compared to 2021, because when I was just looking at 2022, it wasn't telling the whole story. It had some interesting things on it, but then I pulled the prior year to look at it, and this is great. I definitely want to show you guys this because this is a good one. Okay, overall checking account, basically the same balance, not a huge difference, but savings went down significantly, 41,000 down from 2021 to 2022. Now, don't worry, because I'm going to tell you why in just a second. I did notice that they have this cash in bank Betterment. So Betterment is an investment. It's kind of like a robo-advisor investment company. I've never seen people have it for their business. So I'm curious if they're using a personal account, but they've kind of put some money in there from the business to try to like invest a little bit. I'm just curious. I haven't seen anybody ever do that, but it's a question. Interesting. And they didn't have that last year, so that's kind of a new thing. No major asset changes year over year. Depreciation, they're just depreciating assets. You saw that on the P&L. It was at the very bottom down here. Here's that depreciation. But they did have an extra security deposit. I'm curious, though, if they would have gotten a security deposit back from their old place, or if this is all the security deposit from the new place. That seems really high. So just question, make sure that that's the right balance. They have one credit card that keeps a really reasonable low balance. I almost wonder if this is too low and maybe you could be leveraging your credit card a little bit more because you have ample cash. You should be able to use a credit card responsibly. Could you leverage your credit card a little bit more to help you with cash flow and also earn additional points? I love my Chase credit card for business. Gives me lots of great points. And it does look like you have a lot of expenses you could potentially be putting on the credit card. So if you're a responsible credit card user, which it looks like you are, I would wonder if you could potentially be moving more expenses onto the credit card. Okay, current liabilities. This is a little weird. We don't always see this current portion of long-term debt. That's what that stands for, current portion of LTD. So what this is they have a long-term loan, which is probably this auto loan, and the current portion is anything that's due within the next year. So they've separated that out so you can see this is the same amount, 6236. 6236. So if you watched our balance sheet video, I talked about current liabilities versus long-term liabilities. So this is anything that's due within the year. And then this is anything that has, longer life after that. So now that's just a little accounting lesson, I suppose. Not really all that important. Really all of this current liability is just like the auto payments that are going to be due within the next year. But I wanted to show this to you because this business owner deserves a super high five. This is huge, okay? They have paid off $83,000 of SBA loans. I'm assuming this is an EIDL loan. Probably not. It's probably not a PPP loan. It's probably EIDL. They paid off $83,000 in 1 year. I'm giving a round of applause for that because that is pretty incredible. So that's part of the reason why you see this cash going down. They probably realized they didn't need to use all of the loan and were able to pay some of it back. And they had some savings and then they went ahead and just used some of that to pay it back. But they also took some of the profits from the business and were able to pay back this SBA loan. So by the time we're reviewing these financials, I bet this SBA loan is completely gone because these are December 31st, 2022. We're doing this in March of 2023. And I bet that loan is completely paid off. So congratulations. That's a really good discipline and a really great use of that EIDL money and also responsible repayment. So very, very good work. Now we do still have an auto loan here on the balance sheet, and I would like to if that's probably what the interest payments on the P&L were. And probably, I would think that this is probably your next goal, is to pay all of this off. The interest rate doesn't look too crazy. I mean, it's probably like 4 or 5% based on what I was looking at it. It's not a huge amount, but it is money that's just being kind of thrown in the trash. So I would like to maybe intensify the payments on the auto loan, because you do have a fairly significant amount of money in checking and savings. You do have, it's about a month and a half of, let's see, it's almost 2 months of operating expenses. Let's get average operating expenses over, let's take the past 6 months. Average operating expenses are $56,000. So it's actually closer to, and you have $83,000. So it's closer to like 1.5 months of operating expenses. So I can understand being a little bit hesitant of just like paying off the auto loan altogether. But I do think I would rather you pay off the auto loan than just like keeping money in Betterment right now. I would just take that $7,000 and throw it at the auto loan personally, and then just start paying that down more and more, as especially if you're seeing, profits continue and you're able to build up your cash a little bit more here. If you have 2 months of operating expenses here in your cash, I would just keep throwing money at that auto loan until it's gone. So that would be me. I just don't really like having loans that we can pay off. And it seems like you kind of have also a similar philosophy with what you did with the SBA loan. So congratulations again on that. Shareholders distributions, interesting. There's not a lot between December 2021 and December 2022. So that's why I think that these business owners, they did not pay themselves much in 2022, and they were putting all the excess into paying off the EIDL loan. That's a lot of discipline, very impressive. But we can't maybe always live like that. So I would like the business to be earning a little bit more, so that the business owner could take some of their compensation in distributions and some of their compensation in the W-2 wages as well. And I think this is further confirming that that P&L tax distribution here, pass-through entity tax, that we took away, what was it, $11,300? I think that's what it was. That this is probably a tax payment that needs to be on the balance sheet, because the business made $56,000 last year, which means that they probably had a tax bill of somewhere around 20% of that, which is about $11,300. So I would imagine that, and I would think that it should be here in the shareholders distribution, and they only took less than $5,000 last year. I just think that's probably a bookkeeping error that needs to be fixed. Okay. Overall, what's interesting is that overall the balance sheet looks smaller. So the total assets is less in 2022 versus 2021. However, what has happened is the balance sheet has improved significantly, because equity has gone up by $54,000. And liabilities went down by $90,000. Okay. So yes, assets also went down, but it's overall, even though the balance sheet shrunk a little bit, it improved dramatically by having better quality assets and lower liabilities overall, which means obvious and just more equity, more positive equity. That's an improvement in my mind, and really any financial person's mind. So overall, really great. Thank you so much to this business owner who lent us their financials for this financial overview analysis. I think these are super fun to do. And if you would like to have your financials looked at through one of these videos, please email us at hello@claracfo.com, and we can get you some information on how to get that over to us. We can't do everybody's, but we are trying to do more videos like this on the channel. So definitely reach out to us, and if you would like to have a financial analysis done. And if you are super duper brave and you want to come on to the channel and actually have a conversation, so I don't have to guess about what's happening with your financials, I would love to have you on the channel. And actually, we don't have to show all your numbers, but we could definitely have a conversation about your overall financial health. And yeah, I think it would be really fun. So thank you for watching, and I will talk to you guys later. All right, well, I hope that was helpful to you and you learned a lot as you were looking through the P&L. If you are interested in having your financials looked at by me on one of these videos, I would love to do that. I'm also very, very open to doing this as a live conversation. So if that's something that you're interested in, give us an email. I will put the information in the description box so you can check that out. We typically only open this up to people who are on our newsletter list, but if you email us directly and you follow those instructions down in the description box, we will also open it up to you as well. We like to do more of these videos because people are finding them really helpful. All right, well, thank you so much for watching today, and we will see you next time. All right, bye.